Sygnus Credit Investing is taking some of its shares back from investors. What's going on and what does this mean for you if you own Sygnus shares? Well, I'm Kalila Reynolds, financial journalist and educator based in Jamaica. Let me explain. Sygnus is a Jamaican investment firm that provides private credit and alternative financing, mostly to medium-sized businesses. The company listed on the main market of the Jamaica Stock Exchange in 2018, but its stock price hasn't been doing so well. SCI has been trading between $11 and $12 for a few months now. Its 52-week high is $17.50. Now, during its recent annual general meeting, the company's bosses said that the stock's current price doesn't reflect the reality of the company. They believe it's undervalued. So they've decided that the company will buy back $1 to $3 million worth of its shares every year for the next 3 years. So this is expected to boost the stock price. How, you ask? Well, as with most things in business, it comes right back to supply and demand. When SCI repurchases this chunk of shares, less shares will be available for investors to trade publicly on the stock exchange. The fewer shares available for trading, the more valuable the ones that are available will become, and this will likely drive the price up. Now let's use an example that we can all relate to. Let's say under normal circumstances, tomatoes usually cost between 50 and 80 Jamaican dollars a pound. But one day, somebody go and buy up all the tomato from all the vendors at the market. So now you have to go and drive around town to try find tomato. And then you find this one person who has tomato selling. But when you reach, bunch of people are there trying to buy the few tomatoes that this one vendor has. What do you think that vendor is going to do? Raise the price and sell it to the highest bidder, because scarcity causes prices to go up. And that's exactly what Sygnus is trying to do with its stock prices. Not for any nefarious reason, just that they believe the price is greatly undervalued based on the company's performance. And I actually don't mind that they seem to care about their shareholders, because there are other companies that seem to not care at all. And CB comes to mind. Their stock price has plummeted, dragging down the whole market, and they haven't really done anything about it and make it worse. They're still not even paying consistent dividends to shareholders. Yup. Anywho, back to Sygnus. So where will they get the money to buy back all of these shares? The company said it would pay for it through cash flow from its business expansion and also through debt. They're going to borrow some of the money to do it. SCI's board still has to decide when the buyback will start, but as I said, it's expected to continue for 3 years. So if you have Sygnus shares, would you consider selling them back to the company? And do you think all of this is a good idea? Let me know in the comments. You can click the link in my bio and choose newsletter to get money news like this straight to your inbox. Let's get this money.